The popular view of financial success often involves imagining massive incomes, complex trading strategies, or incredible luck. This perception is not only daunting, but it's also fundamentally wrong. The truth is, being financially above average is surprisingly easy to achieve, requiring not genius, but rather a simple commitment to avoiding catastrophic mistakes and maintaining basic, consistent habits. Most people self sabotage their finances by falling for common traps, which, if avoided, immediately elevate you above the majority. The first and perhaps the most powerful step to being above average is avoiding high interest consumer debt. This is the financial black hole that traps millions. Credit card debt, payday loans, and other high interest consumer credit are financial anchors that actively pull your net worth backwards. The average credit card interest rate often hovers around 20%. This means for every dollar you invest hoping to earn 7 to 10%, you're paying 2 or 3 times that in interest just to carry a balance. The simple act of living within your means and paying off your credit card balance in full every single month places you in a significantly stronger financial position than a massive percentage of the population. People who consistently carry high interest debt are actively ensuring their long term financial failure, regardless of their income. By simply eliminating this negative force, you clear the runway for growth. The second key habit is automating your savings and investing. The majority of people approach saving with good intentions but poor execution. They wait until the end of the month to see what money is left over, which for most ends up being very little. Being above average requires flipping the script. Pay your future self first. Automating a percentage of every paycheck, even a modest 10%, to go directly into a retirement account like a 401k or IRA is a non negotiable step. The power of this action is threefold. It removes the mental effort from saving, it forces you to live on a smaller budget, and it ensures consistency, which is the single most important factor in compounding wealth. The difference between saving consistently for 30 years and saving sporadically for 30 years is astronomical. This habit alone is the engine of long term wealth. And because so many people lack this discipline, simply starting this process puts you ahead. The third area where the majority fails is participating in the market. Millions of people keep all their long term savings in a low yield savings account because of fear or a lack of knowledge, guaranteeing that inflation will erode their purchasing power. To be above average, you do not need to pick winning stocks. You need to consistently invest in a low-cost, diversified index fund that tracks the entire market, like the S&P 500. By doing this, you capture the entire long-term growth of the economy, which historically has averaged around 7 to 10% per year before inflation. You're essentially betting on human ingenuity and global capitalism. This simple, passive strategy outperforms the vast majority of actively managed funds and is exponentially better than keeping your money in cash. The knowledge required is minimal, but the discipline is key. Those who avoid this step are deliberately choosing to fall behind. Finally, the secret to staying above average is the long term mindset. Most people operate on a financial timeline of weeks or months, worrying about their next paycheck or their next purchase. Financially successful people operate on a timeline of decades. They understand the difference between good debt, which helps build wealth like a mortgage, and bad debt, which funds consumption. They view market crashes not as a disaster, but as a temporary discount. They prioritize their retirement and long-term goals over immediate gratification. The shift from a consumer mindset to an owner or investor mindset is what truly separates the financially comfortable from the perpetually struggling. By simply refusing to play the financial game the way most people do, by avoiding high interest debt, saving automatically, and passively investing in the global economy, you bypass the most common pitfalls and position yourself to be financially above average with the relative ease. It's not about earning more than everyone else, it's about making smarter, more consistent decisions than everyone else. Of course, none of what I said is financial advice, and it's all just my opinions. If you enjoyed this video, make sure to like the video and subscribe to the channel. If you like these videos and you want more no BS videos about wealth building, about reaching financial independence, and more about finance in general. Thank you for watching, and I will see you in the next one.